Welcome to Morningstar. After more than 2 years, Hong Kong is lifting hotel quarantine rules for travelers. For many, this is welcome news. Meanwhile, mainland China and Macau's borders remain firmly closed. How is this mixed arrangement treating travel stocks in China? We're talking to Kai Wang, senior equities analyst at Morningstar. Hi, Kai. How might the new quarantine policy in Hong Kong help travel stocks get back on track?
So I think on paper it looks better than it is, but there are a couple of things to consider here. One, China has not fully opened its borders to Hong Kong yet, and the majority of Trip.com's revenues comes from within mainland Chinese bookings. So, two, even with the assumption of a fully Hong Kong-China open border without any quarantine or any restrictions at all, Hong Kong and Macau travel accounts for 20 to 25% of Trip.com's international revenues, and then the international revenues account for about 25% of total Trip.com revenues. So this implies about a 5 to 6%, revenue recovery from a normalized level pre-pandemic wise. So yeah, there is some benefit, but it may not be as large as you think.
Right. The all-important Party Congress of China is around the corner. Are there preemptive signs that are indicating border reopening then?
Yeah, well, I think there are mixed signals. I think it's a positive that Hong Kong has it's removed most restrictions. Now we have a 0+3 policy here. And then Macau appears that it's headed towards reopening, just given how casino stocks are reacting right now. But however, we also recently saw Chengdu and Sanya go down lockdown, and then now Yunnan just went on lockdown as well. So while there are some positive signs, I wouldn't come to a complete conclusion that there's going to be a full unrestricted travel just yet.
Well, you mentioned stocks reacted to Hong Kong's relaxation very positively. Should investors still stay very cautious with travel stocks? Does it make sense to slowly add to these names to our portfolios?
Yeah, I would say so, that we should be be kind of cautious. You would like to see a full reopening to international countries and not just Hong Kong and Macau before adding these names. Domestic recovery is currently is about 70% of 2019 levels pre-pandemic, while international recovery is still non-existent. So your upside for these stocks is likely going to come from the international side of the business. So I think it would make sense to be cautious. And given that there's no visibility on any new government policy until at least the Party Congress meeting, we would like to just wait and see how they treat international travel first.
Right. Thank you so much for your time, Kai. For Morningstar, I'm Caitlin.